Welcome to the Phil Tracy Money Audio Commentary. This is Owen Tracy recording. It is 4:28 p.m. and that is British summertime, and today is August 1st. I'm recording a little earlier because I'm trialing this recording through Zoom, and that was on the back of a recommendation from one of the subscribers. I also want to express my deep thanks to various subscribers who are writing in with advice on how best to improve the audio quality. And I think that I've generally used Zoom for recording the Markets Now events, and so far those audios have been reasonable, although some of the issues have been about the quality of the audio simply on the back of so many people joining, and my inability to cater to that while also speaking. Now, when we think about what are we looking at right now, there are several, I think, rather very significant events that have happened today. One is the imposition of tariffs, and second is that employment figures undershot expectations in the USA by really quite a significant margin. What we've definitely been seeing over the course of the last year or two has been a very divisive argument in the bond markets, because in the big sell-off in 2022, where the stock market went down and then bonds went down simultaneously, that was really problematic. It was one of the few occasions where the 60-40 portfolio simply did not work at all. And that really threw a lot of people into a disillusioned perspective when they think about everything that's going on in the world, because historically, when the stock market goes down, bonds would catch a bid. And that didn't work at all in 2022. And bond yields went up from 2 to almost 5%. And that was really profound. So what's rather interesting right now is that with the imposition of tariffs, the stock market has pulled back rather sharply in here today, more sharply internationally than on Wall Street. The major indices are down over 1% on Wall Street, but over 2 and sometimes 3% for most of the European and Asian markets. And then the 10-year Treasury yield was lower today by 13 basis points. So we've certainly had really quite a significant move in many asset classes, but at least the 60-40 portfolio is doing its job